Started. This is our webinar for the Transform Finance Investor Network and some guests on renewable energy and community consent in the context of human rights. Let me see if I can move the slides. I will give you a brief introduction and then we'll have some really terrific presentation from Meredith Benton of Sonen Capital and Eniko Horvath from the Business and Human Rights Resource Center. Now, why are we talking about this issue in the context of Transform Finance? After all, everybody is excited about renewable energy. And a big part of it for us is that while renewable energy projects are a mainstay of impact investing, and they ought to be, they are essential for the future of the planet and a transition away from fossil fuels, there is also a meaningful potential for downsides on the social side. And it appears to us that we have both been in some ways not taking into account the social aspect enough and also missing some of the potential upside that there is on the social side of renewable energy projects to really create agency and opportunities for ownership within communities. And in the context of this community, we think that there are some meaningful opportunities to learn from the past experiences in other industries, and also to act and be activated as an investor coalition. And that will be a little bit the lens through which we'll be looking at it today. Now, those issues have not been explored very much, and we see this within a broader group of webinars that we've been doing. One recently on climate bonds and the standards that there are currently for climate bonds that seem to not be focusing on the social aspect. And the earlier webinar that we had done with Sergio Oseransky from the Yansa Group in Mexico and in Kenya around wind projects that had resulted in some problematic circumstances with the local communities and some of the alternatives that we had seen that could give a more meaningful voice to the communities that are affected by these projects. So within the context of the Transform Finance approach, of course, we are always focusing on the community engagement piece. What kind of voice is given to communities that are affected by these projects? What kind of governance do they have over the projects? And also what kind of ownership attaches to those projects? And that means looking more deeply at the issue of who really benefits from these projects and who gets to bear the risks when the projects don't go the way that they ought to, or even when they do from the standpoint of the investor, but not necessarily of the other stakeholders. In the context of who really benefits from renewable energy, I think we should be mindful of the fact that we are largely addressing the needs of the industrialized North and its past shortcomings in terms of the use of fossil fuels. And while we address these needs, we can't be creating negative outcomes still in a global South that has already been affected by deforestation and other consequences of northern industrialization. And as a correlate point of that, also being mindful that we could be still neocolonial in a lot of these interventions in the global South. The impact investing industry has shown sometimes a tendency to still be imposed from the outside and not really being very thoughtful around the impact on the local communities in the global South. And really, we don't get a free pass just because we're dealing with clean energy in this case. Now, this is something that I think big investors are really starting to care about. So this is not just a niche idea, even though it has not been explored that much. And I bring up here the example of the Norway fund, the oil fund, that is almost $1 trillion, that recently, at the end of June, excluded 2 funds from its portfolio because of concerns over some of the human rights implications of their investments off of the coast of Western Sahara. While that was in the context of the self-determination of Western Sahara under some specific UN regulations, it was really a meaningful example of 2 very big funds being excluded on human rights grounds, which I think bodes well for the conversation that we'll be having today with Meredith and Eniko. And while big investors do care, we're still lagging in the regulatory environment around the social implications of renewable energy projects. So towards the end of last month, towards the end of June, also the SEC adopted new rules for the disclosure in the case of resource extraction of the type of payments that were being made by to governments, by corporations. And we have not seen a similar regulatory environment in the case of renewable energy. So there is a possibility there that we're lagging behind, and at the same time, we could be taking some action to ameliorate that situation. So I would like to emphasize in this presentation the role that we can actively play as investors for a variety of reasons. One is that this is one of those clear instances where there is a good match between the social outcomes that we're trying to see and the financial case, as Meredith will explain to us. Another reason why I want to lift this up to the community is that we have seen a lot of interventions at the company level, trying to hold companies accountable and improve their practices. We have not seen quite as much at the investor level in terms of seeing what role can be played there. And there are several levers that are available for the investor and several points of intervention throughout the life cycle of a project to ensure that the human rights framework is adopted. So with that, I would like you all to consider what we can do as a community and as investors in general to take up these issues, lift them up, and make sure that we are achieving the social outcomes that we're seeking while working on renewable energy projects. With that, I will pass it over to Eniko, who joins us from the Business and Human Rights Resource Center. Thank you so much, Eniko, for joining us. And I hope you're able to move the slides yourselves. If you're not, I will do so myself for you.
Great. Thank you very much, Andrea. I'll try to move them, but I'll introduction of the Resource Center later on. But before I kick off, just to be clear that as an organization, we do fully support the transition to a low-carbon economy and believe that renewable energy is a key part of that. However, we also want to communicate the idea that a fast transition to a low-carbon economy must also be a fair one, or one that respects human rights. So with that in mind, I thought I'd start with a quick introduction on the types of rights of communities that can be affected by renewable energy projects. And actually, if Andrea, you could change the slides, that would be great.
Yeah, we'll do so.
I'm not sure. Okay, thank you. Great. And I don't actually see the slides now, but I'll do my best to take a look. Okay, so with that in mind, the types of rights of communities that can be affected by renewable energy projects. I will address that first, then I will dive a little bit deeper into some tricky definitional issues and share 2 case studies with you. And first of all, just to say that when I'm speaking of renewable energy, I mean hydropower, wind, and solar to a certain extent, because those are the types of sectors that we have been looking at the Resource Center. So in terms of the types of issues that you see on the screen, many of these should ring familiar to you, as they are the same rights that can be affected by other land-intensive projects, especially in developing countries. They include land rights, indigenous peoples' rights, the right to free, prior, and informed consent, the right to food and livelihoods, access to water, life and security, etc. Of course, there are many others that could be affected that are not mentioned here. These are just the ones that, as the Resource Center, we have seen communities raise the allegations about the most. So to dive deeper into one of these, one of the key concepts in this field for companies is community consultation and free, prior, and informed consent. And if Andrea, you could just flip to the next one. Thank you. Starting from community consultation, most companies have some commitment to consultations already in place. However, they often express this as community meetings, engagement, and in a meaningful way that's accepted by local communities. So that's why the word meaningful is often used to qualify this process. the definition of meaningful that has been promoted by the Bank Information Center and has been mostly accepted by the World Bank is that consultations have to be free from coercion, have to begin early and continue throughout the project. They have to involve timely disclosure of relevant and understandable information, and they must be inclusive, especially of the most vulnerable community members. Now, free, prior, and informed consent, on the other hand, is very similar to meaningful consultation. The main differences are that in international law, this concept primarily applies to Indigenous peoples, and it requires their consent through their traditional decision-making structures, and importantly, they have the right to say no to a project. FPIC is, as we refer to it for short, is enshrined in the ILO Convention 169 and also in the UN Declaration on Indigenous Peoples. And it's also promoted as best practice for companies' community consultation processes for non-Indigenous peoples as well by civil society. So if we move to the next slide, another contentious subject is what we define as a community. So it may seem obvious at first, but the way that companies define communities they consult with varies quite a lot. The way it usually works is that the definition of who is an affected community is at the discretion of the project developer. And they can define them in different ways. For example, I've seen some developers look at the number of meters that communities are located from a project. Others look at the town or municipality they live in or the ethnic group they belong to, etc. But what we are talking about when we say affected or potentially affected communities is defining the community from a rights-based approach. So communities whose rights could be potentially or actually affected by a given project's development, which requires doing a mapping of these communities and an impact assessment focused on human rights. This definition also means that there should be an emphasis on inclusion of vulnerable community members, and of course there are other context-specific factors to take into account. For example, for hydropower projects, companies that are not using a rights-based definition can often forget to take into account impacts on communities that are not right next to the dam but live downstream and depend on rivers for fishing, for example. So it's these types of nuances that we are talking about when we're talking about a rights-based definition. So if we moved on to the next slide, another debated concept in this area is what constitutes Indigenous peoples. It's debated because there's no universal definition for it, yet there are more stringent international standards that apply to this group. The UN uses a fluid definition, which includes some key characteristics that refer to self-identification as Indigenous, or strong ties to territories and natural resources, distinct language, among other criteria. And again, here, because we don't have a clearly defined group, it's especially important to take into account local and regional contexts. So here I highlighted the African context as an example. In Africa, most Indigenous peoples are nomadic or semi-nomadic pastoralists or hunter-gatherers. So sometimes when companies look at the groups that are affected by their projects, they don't consider these groups to be Indigenous because they don't fit in to some of the UN's definition. This happened earlier in the case of Lake Turkana Wind Farm, which is currently facing a lawsuit in Kenya around community impacts, for example. In the African context, the Commission on Human and People's Rights is quite progressive in this regard and has a working group on Indigenous peoples, and it recommends for there to be a more context-specific emphasis on self-identification and dependence on traditional land. That being said, legal protections are quite weak for Indigenous peoples in Africa. So in 2010, the Republic of Congo became the first African country to adopt a law specifically protecting Indigenous peoples. And the Central African Republic remains the only African country to ratify ILO Convention 169 on Indigenous peoples and FPIC. So as you can see, there are significant gaps in legal protections as well. So now that we looked at some of the key terminology, I wanted to show you two cases where communities were affected by renewable energy projects. The first is the tragic killing of Berta Cáceres, who you may have heard about. She was a human rights defender and an indigenous leader of the Lenca group who was opposed to the Agua Zarca dam in Honduras, and she was killed earlier this year in March. Agua Zarca is a small dam of a 21 megawatts capacity, and investors in Agua Zarca include the Dutch and Finnish development banks. They claim that Agua Zarca is a clean energy project. They focus on the benefits it would bring for local communities, which is quite understandable. However, Berta's community was and still is strongly opposed to the dam as it would affect their livelihoods, and they demanded their right to free, prior, and informed consent. What's interesting about the case is that the Dutch Development Bank claims that FPIC was secured indeed, and at the same time, human rights groups argue that the signatures on the document that they show as proof were not genuine. So there are definitely some tricky issues here. And for the time being, Dutch and Finnish development banks have suspended their activities in Honduras. They conducted a mission to the country and are currently in discussions with civil society about next steps. The second case is of a dam that was suspended prior to being built because of the dialogue process. And this is interesting because it shows how companies can respect free, prior, and informed consent in the sense that when the community rejects the project, they don't go ahead and develop it. And this was the Cerro de Oro Dam in Mexico, which would have affected indigenous communities in Oaxaca. In 2010, Accountability Council supported the community in bringing a complaint to the Overseas Private Investment Corporation's Office of Accountability. This office set up dialogues between the affected communities and the companies in charge of the project, and they reached an agreement to suspend the construction and develop alternatives. In the end, communities also rejected the alternatives, and the project remains suspended, and the company continues to respect the rights of the communities to reject the project. And with that, I hand it over for questions.
Great. Thank you very much, Eniko, for that stage setting for us. Now, I want to see if there are any preliminary questions on this piece, or we can do another part, and then there will be another opportunity for questions. If you would like to ask any questions, please feel free to write them in the little box or raise your flag, and we'll find you that way. Great. I don't see any raised flags, and I don't see any questions at the moment. So, Meredith, let me turn it over to you, and I will move the slides for you.
Great. Can you hear me?
I can hear you well. Thank you for joining us, Meredith.
All right. Well, likewise, I'm very glad to be talking about this issue. So if you'll go to the Sonen Capital slide, a quick introduction on who I am and why Sonen Capital is on in this conversation.
I can't hear you loudly enough. Sorry, if you could speak a little bit more loudly.
Oh, okay, we'll do our best.
Right.
So for those folks who aren't familiar with Sonen Capital, we're an impact investment management firm. We invest with an eye towards improving social and environmental conditions, and there's an intentionality in that. So we're building out frameworks, we're building out investment guidelines across asset classes so that we can try to put capital towards the world that we'd like to see. That's who we are, and that's why we're involved in this conversation. That many of our clients are very much interested both in climate issues as well as human rights. So if you'll slide down, you can skip the legal slide.
There you go, just so that everybody has seen it.
Right. And so then there's the question of why do investors care about this issue? And I want to be really clear. Not paying attention to human rights and vulnerable communities as we look at developing clean energy and as we try to move towards sort of lower climate impact energy sources, not paying attention to the human elements undermines the climate movement, undermines the environmental movement as well. But my comments will be specific to why investors care. But they're all, it runs parallel, because to the extent that we are wasting resources or resources are lost or there's delays as we try to build out the renewable energy space, it undermines the goals of the environmental movement as well. So if we're not paying attention to community consent, we're not paying attention to what's happening on then it can lead to project delays. It can increase cost and uncertainty, and that leads into the potential for a material loss in shareholder value. So there's a dual incentive from an investor perspective and from impact investor perspective to have these issues addressed, to have them addressed proactively. So here's one of the things we need to understand is all renewable energy projects require land. Well, almost all. And the process of obtaining that land is complicated. And there's no uninhabited land. So to the point that Eniko was making, especially within rural areas and indigenous communities, there's also pastoral communities. There's movement across landscape. And so there's very, very little, and there's studies that say maybe 7%, but there's very, very little land that isn't inhabited. So any project is going to have some level of engagement with a local people. And often, especially if we're in the emerging market, those peoples are in regions that were formerly underdeveloped or less likely to be contacted because they were too windy, too sunny, too hot, all things that now make them a great place for clean energy development. So if you want to go to the next. So a lot of what we've done in terms of building out the investor case for concern is to look at other industries that have already had very land-based models where a lack of attention to community involvement and community consent has proven to be harmful. So in the extractive industry, there's been a series of incidents which have shown that there had to be a more proactive and intentional movement from these industries in terms of addressing local community consent and involvement. And Eniko is going to build on this in her following comments, but we've seen such a movement from the industry that the International Council on Metals and Mining has a position statement specific to indigenous peoples and was advising the adoption of three-part and informed consent. You have a lot of unexpected actors, such as the China Chamber of Commerce of Metals, Minerals, and Chemicals, saying that these are issues that matter, and they matter from a financial fiduciary perspective. So here's the thing. There's a long list on this slide, and it's really just to build out this idea that not paying attention to these issues in a proactive way has shown to have damages at a project level and at a company level. And the ones that I really want to emphasize is that increased operational expenses, it's a big problem. There's studies that show anywhere between a 29% increase to having to have the project closed down because the cost, unexpected costs associated with poor community consent process has undermined the project. From an investor perspective, if you're looking at timing uncertainty, that's a very big concern. Timing is such a big part of how return expectations are built, and investors tend to want their capital returned at the point in time that it was anticipated. There's a reinvestment risk that comes with delays and can very much reduce the returns that you'll see. And then ability to expand the project, I wanted to highlight this one. We've seen this in the extractive industry, and from a climate change perspective, we don't want to have projects that can't expand. We really need to get climate and renewables and solutions to scale. So if we're hitting regulatory or community resistance to expanding a project, there's not just a financial impact, it's also undermining what we want to do more broadly speaking. Go to the next page. And then corporate level projects. So there's projects and then there's the corporate level. And the corporate level, if there's a problem at the project level, it also harms the corporate level. So debt servicing problems, that's something as an investor you'd be very concerned about. But you also see impacts throughout the company. So even if it's a portion of their business line, you've got distraction of management, you may have legal risk, there's the PR element, there's a number of different things that you need to be concerned about from an investor perspective at the corporate and at the project level. So here's, it's not completely unique, but it's relatively unique to the clean energy space, is that investors are exposed to clean energy, or they could choose to be exposed to clean energy across asset classes. So you'll have renewable energy in almost all parts of your portfolio, and that's a risk and an opportunity on both sides. So all of your managers need to be thinking about and aware of what this might mean across the different asset classes. And you'll see just the different examples for those who can read it on their screen of where that exposure either is or may be. We think a lot about venture capital and renewables and tech development, but the exposure is actually much broader throughout the entire portfolio. Oh, actually that moves us to Eniko.
So thank you Meredith, for setting the stage a little bit from the investor side, and why both on the social and on the financial returns, investors should care about this. I want to pause for another second to see if there are any questions at this point. Again, feel free to raise your hand or type out a question as you prefer. Okay, so in that case, let's bring it back to Eniko and to tell us a little bit more concretely about some of the practices that we have seen, some of the issues, and also some of the solutions that have emerged.
Sure. Can you hear me?
Yes.
Great. So a belated introduction about Business and Human Rights Resource Center. We are an NGO that covers the positive and negative impact of companies on human rights. We aim to increase transparency around company actions through our website, which is the biggest online library on these issues, and also to enhance accountability through our company response process. And the way we work is that we have a global team of regional researchers in about a dozen countries who are in touch with local NGOs about human rights concerns and help them raise these issues with companies. So whenever we receive an allegation about a company from an NGO, we approach the company for a response and post both the original allegation and the full response publicly on our website. So that is context in which we are doing this work on renewable energy and human rights. Just to give you an overview of the scene in terms of our approaches to renewable energy companies so far, we have approached in the past 10 years the wind and hydropower sectors about 100 times for responses to human rights allegations, and we found that 91 out of those 110 allegations related to the wind and hydropower projects took place after 2010. So there's definitely an increase in the allegations that at least we are receiving. We also saw that communities in Central and South America and Asia are raising the most allegations. More than 50% of the allegations we sought responses to were related to Central and South America, and 28% of them were related to Asia, 13% to Africa. We finally saw that the hydropower sector faced the most allegations in this group, but allegations against the wind sector have been increasing over time. So while 91 out of the 110 allegations were related to hydroelectric projects, 19 only related to wind power, but all of these wind power allegations took place after 2012. So it's something that is receiving a lot more scrutiny now. So on to the next slide, where we can see a project that we were we launched earlier this year when we decided to look at the level of awareness around human rights practices in the wind and hydropower sector. We reached out to 35 companies involved in wind and hydropower projects to ask them about how they approach human rights. We did this by developing 10 questions in consultation with civil society, investors, and companies. The questions, which you can see on our website, focus on the company's general human rights approach, but also on engagement with local communities more specifically, because the main issues that we've been seeing arising were related to local communities. So 14 out of the 35 companies responded to this outreach, and we complemented this information with desk-based research. We found that 2/3 of companies we reached out to have a human rights policy in place, but only half of all the companies refer to international standards in their policies. In terms of the commitment to consult with local communities, 2/3 of the companies indeed had a commitment, but when we will dive deeper into this in a few slides. We see that the commitment to free, prior, and informed consent was not so widespread. And finally, the wind power sector is still lagging behind, it seems, because half of the wind energy companies we reached out to do not yet have a public commitment to consult with local communities, while almost all of the utility and hydropower companies do have these in place. So on the next slide, you can see a list of companies.
An intermediate question there, Eniko. Can you tell us why you think it is the case that you're seeing more issues around the wind power now than prior to 2012?
Sure. I mean, I can just give you a preliminary response in terms of my personal perspective, which is that there is more scrutiny from civil society on wind power projects, but also that more wind power projects have been put in place since then. So those are the two kind of preliminary responses that I see.
Great. Thank
for
you.
that increase for now.
Thank you.
So yeah, here you can see the companies that responded to the questionnaire in the wind, utility, and hydropower sectors. Again, the hyperlinks, I don't know if you can click through, but if not, on our website you can click through, see their full response to each of our questions. Some of them responded quite in a lot of detail, so it's interesting to take a look at it. And then on the next slide, we can see the companies that didn't respond. So we did complement this the responses by companies with desk-based research. So we looked at all of these companies' community consultation commitments that are publicly available. And on the next slide, we can see we took a closer look at the issue of community consultation and free, prior, and informed consent. So if we look at the third column in each of the sectors, what's interesting is that only 3 out of the 35 companies referred to respecting Indigenous people's right to free, prior, and informed consent. And interestingly enough, 2 out of these 3 companies, so Vestas and Engie, have faced Vestas and Lake Turkana have faced challenges about this commitment on the ground. So Lake Turkana was a company that was involved in the controversial Kenya wind power project that I mentioned earlier, and Vestas has been involved in a project in Mexico, also related to free, prior, and informed consent. There were allegations raised against it. So this shows that policy commitments are a very important first step, but by no means can companies stop there. There needs to be a stringent implementation of these policies on the ground. In the first column, you can see that we took a look at what I mentioned earlier, the rights-based definition to define which communities companies engage with. And there's, as you can see, there's a long way to go on that as well. Only 9 out of 35 refer to rights-based approach, and only 2 really explain this more fully. So as I mentioned earlier, many of these issues are not new, and there are other companies and sectors that have grappled with them, as Meredith mentioned as well. The extractive sector is a great example. If we move on to the next slide, we can see research that was done by Oxfam last year. It's called the Community Consent Index, which looked at 38 oil, gas, and mining companies and assessed their level of public commitment to community consultation. They found that many companies, a third of the companies that they looked at, actually have a commitment to FPIC. So in that sense, these companies are one step ahead of some of the renewable energy firms, although of course this doesn't mean that they're without allegations, not in the least. It's just an important first step to take. In the context of this research, Oxfam made several recommendations, including adopting an explicit commitment to FPIC, developing accompanying implementation guidelines, extending FPIC to include all project-affected communities, etc. So these recommendations can also apply to renewable energy companies as well. There are other organizations working on this as well. For example, the International Institute for Environment and Development did a great study on meaningful consultation in the extractive sector that I'm also happy to share later on, whose findings can be relevant for renewable energy. So I think there's an opportunity to do more on looking at how to apply lessons learned from extractive sectors to the renewable energy sector. On the next slide, you can see some of the international safeguards that we have in place now. And these are just a few, just to highlight the ones that are especially relevant to this context, and there are shortcomings but also opportunities associated with them. So the UN Guiding Principles sets out human rights due diligence and meaningful consultation responsibilities of companies. It is soft law. It's not a hard international law, and it doesn't have an enforcement mechanism, but at the same time, it has been integrated into legislation and safeguards, and there's an opportunity for investors to use it to engage with companies to push them on these issues. The World Bank just last week actually adopted its revised safeguards on social and environmental safeguards, which include free, prior, and informed consent and meaningful consultation. Of course, there are concerns about it from human rights groups. Groups say that the World Bank has backtracked on some of the FPIC and Indigenous peoples' protections, but it is a major step, and it is important to keep it as to look to these standards and use them in engagement as well. It's just a matter of clarifying the terminology and really adopting a strong set of definitions for them. The Ifc Performance Standards, similarly, I've spoken to investors that use those quite often. Again, the Lake Turkana project said that the project developer said that they abided by Ifc Performance Standards. So it's important to use it as a baseline. It's also important not to take other issues for granted while using it. So establishing rights-based definition of communities, etc. And finally, just two other standards, one for hydropower sector and one for the wind sector. The World Commission on Dams report remains the most comprehensive set of guidelines for dam building on social and environmental issues. Again, these are non-binding, but good to keep in mind. And finally, Equitable Origin, which is an NGO that has certification standards on social and environmental issues for the oil and gas sector, is now developing adapting those standards for wind energy projects. So they actually have a comment period open until the 30th of September, so it's another opportunity to engage with new standards being developed or adapted to the wind energy sector. If we move on to the next slide, I just listed a few other resources that might be relevant, but perhaps we can move to questions or to the next set of presentations.
Wonderful. Thank you so much, Eniko. And just for those that might not be seeing the slides, among the resources are the Business and Human Rights Resource Center, Equitable Origin, the UN PRI, RepRisk, IRIS, Sustainalytics, and others as ESG research providers for investors. Wonderful. Question came up from Naam Garvey for Meredith on how mainstream is this understanding among the investors? How far along are we in the process? And if anybody else has questions, please jump in as well.
We're extremely, extremely early in the process. We'll talk about it, and sort of the next set of slides is that we're part of the hopes for this call today is actually to get more investors involved and interested, because we're really at the stage where we need to be raising a lot of awareness about why this matters and why we need to start thinking about it more seriously.
Great.
So moving on to this question of what can we do as investors, and I'll weave in sort of where investors are currently. From the perspective of an investor being able to impact the way that a project operates, the way that a renewable energy project is funded, or even the land acquisition associated with an intention, with the intention for developing a project, timing is an extremely important part of this. You have the greatest influence upstream, so it's before any capital has been outlaid, before any money sort of is exchanged, before the land is purchased. That's really when your voice is most powerful as an investor. So if you'll see the small chart that's on the screen here, if we're in any of the private asset classes, so private debt and equity, real estate, or real assets, those are investments that once you have committed to, you actually have very, very limited control over what happens. But prior to the commitment of your capital, you have an extremely large amount of influence. So during the wooing stage, before they've captured you, you can really make a lot of requirements. You can have side letters signed. You can structure these issues and the expectations of best practices in human rights and the treatment of vulnerable peoples. You can structure that into the deal as a part of the agreement of your capital being deployed. If that doesn't happen afterwards, then they're in breach of the contract. And so it's really important that the message is heard ahead of time. To a certain extent, in the public asset classes, in fixed income and in public equity, so stocks and bonds, your influence is, it's limited in a different way. So in public equities, there's shareholder engagement. In fixed income, there can be sort of an exclusion of that asset class, or there can be conversations during the underwriting process around what preferences are, so that the underwriters know that there's a larger market that exists for fixed income instruments that are thinking about these issues. But again, the message has to come ahead of time. You go to the next slide. So I'm going to break this up to within the portfolio, within each asset class, and then sort of investors as a whole, going to the question that we heard. Within the portfolio and within each asset class, there's opportunity. So in each case, we're not powerless. This capital is extremely powerful, and we can think of different solutions or different ways that we might begin to integrate human rights and vulnerable communities into our clean energy commitment. One of the things I wanted to highlight are around private equity. There's been work that's come from the Swift Foundation and Sergio Orsiansky and Jansa around enabling the development of local community-owned power systems that are clean energy systems. It's a creative way to try and look at the elements of energy equity. And within real assets and real estates, again, on the private side, there's been commitment that the Dominicans, a Dominican order is leading the way on, and they're launching new funds where the mandate of the fund itself is going to be climate change and vulnerable peoples taken in concert. So there's a lot that is happening or may be happening, so we're on the verge of a lot of innovative thinking, but to the earlier question, we're very much on the verge of integrating these issues and these concerns. If you slide to the next one. So this is what brings Sonen into the conversation and where we are, and this is going back to your public equities asset class. So in last fall, Google, of which many of us are likely shareholders, to large cap public equity stocks. So it tends to be in most investment portfolios. There was an announcement that Google, as a part of a very admirable clean energy commitment, had invested in the Lake Turkana wind power project. And the Lake Turkana wind power project has had a number of allegations that there's been a lack of consideration of local peoples and communities, and there's been an exacerbation of violence, and things, as an understatement, have not been going well. So investors worked together, and there's over 30 investors signed the letter to ask Google about its policies and practices as it looks to deploy its clean energy capital. So the question was catalyzed by the knowledge of their investment in the Lake Turkana wind power project, but we really wanted to get a sense of almost as a community, how is Google thinking about these issues? They've made a $6 billion commitment to the emerging markets and clean energy development. So we really wanted to understand what they're doing. And the response that we had from Google was thin. It was limited to 2 very short emails, and we're hoping that they'll be more involved in the future. But what it's done is it led Sonen and other investors to take a step back and say, well, what would we consider best practices to be? What are our expectations as investors who are committed to the clean energy transition? What should we be doing to protect the vulnerable communities and to ensure community consent? So if you'll go to the next slide, we're very much at the early stage of that. So the very first step is, well, we're going to research it. We're going to look into it, and we're going to try to understand what best practices are, what we might be doing, what are the issues that would need to be incorporated into a very thoughtful approach to ensuring that these things are, that we're doing this the right way, we're doing it thoughtfully. So we're at the knowledge building stage of the process. So Sonen's building out an investor briefing that looks at community consent and clean energy. And you'll see, and I really want to emphasize it for those who maybe can't see their slides, we're seeking advisors and co-authors on this piece. It's meant to be an awareness-raising document. It's meant to be an educational document, and Sonen is learning alongside others. So we really hope that others will join us in trying to craft this piece, working on this piece together. So once they, if you'll move to the next slide, Andrea. Once we sort of have a strong sense of what we would say we should do as a community of investors, then we can look at developing an investor statement and building up the capital that stands alongside us. So going back to this question of timing, to the extent that we're able to be proactive in getting a message out that says there's a huge amount of capital waiting in the wings to invest around clean energy issues, but we'll only do so if certain standards are met around vulnerable communities and around community consent, then we're much more powerful than if we're trying to make this statement as individuals or smaller investors or after the project has begun. So the investor briefing to lead to an investor statement that would make clear that we require certain things: strong corporate governance, expertise on staff, policies and practices that are clear at the project level and at the corporate level, transparency, going back to Eniko's work, and then collaboration with local communities, activist organizations, and so on. In the meantime, or as we work through this, everything needs to happen in concert. I don't think we really have time to wait on this issue. So we really need to be talking about this. We need to be talking about the impact on vulnerable populations as we build up the clean energy space. We need to be talking about it with our other climate action networks. We need to be assuring that our investment managers are attentive, that they're attentive across and within each asset class, that they're aware of this. We need to be building relationships with activists and vulnerable communities on the ground, because oftentimes we can write a letter to the project owner as an investor, or we can communicate our concerns in a more public forum and be listened to in a more public forum than a local activist or community group may be, but they'll only know to work with us if we start to build out those networks now. And sort of the last and the most, and well, not most, but extremely important to support Eniko's work is to have a transparency expectation. So regardless of where we are in the investment process, we can still expect transparency from the clean energy industry and ask them to be participant in things like the Business and Human Rights Resource Center survey. So this conversation in today's session, I think, is a very important part of beginning the way that we should all, beginning to think about how we all can work together to raise awareness around this issue. To be, Andrea and I were talking about this ahead of time, this organization can really be sort of the pack snowball at the start of the hill to move this issue forward and to build up a lot of momentum to make sure that others are being attentive to it. And we have a really strong sort of humanitarian reason, there's an environmental reason, and there's also very strong case as investors to be taking this seriously. I'm very much looking forward to the conversation.
Wonderful. Thank you so much, Meredith, for all this. And I appreciate in particular how you crystallize the opportunity for engagement there. There are a couple of things that I wanted to lift up from the last few points of the presentation. One is, again, the particular role that this investor community can play and how important it is to be able to eventually activate other investors that might be sitting on the sidelines on this issue or simply not be quite aware of it yet. And the second, which is a consistent theme that we bring up, is really this idea of the important role of communities, community activists, social justice leadership locally, and how we try to facilitate that conversation so that their voices get lifted up and heard by the investor community as it can inform their practice, not just in terms of the social impact that they end up having, but as Meredith pointed out, also in terms of some of the financial risk that pertains to these investments. And as such, I always encourage you all to support this work that is being done, often in tremendously difficult and dangerous situations. Now, a few questions that have come up, and apologies if we haven't addressed them before. One question for Eniko from Dave Mozerski. He was asking whether solar was explicitly excluded from the study. Let me give you a couple of other questions as well that we can probably put all together. One question from Emily Greenspan on what methodology you used to select the companies that were part of the research sample and what the next steps will be for engagement with the companies in that sample. So we can start with that, and then I'll turn to another couple of questions.
Hi, great. Thank you so much for the questions. In terms of solar, yes, in this iteration of the project, we did exclude it just because we didn't have the capacity to look at it. We would love to take a look at it in a future iteration, and we are looking at moving ahead with the project and exploring if we should move into different sectors, including solar. So that's definitely on the plate, but not looked at yet. Emily, thank you so much for the question. I'm assuming this is Emily from Oxfam, so thank you for your research as well. The methodology for companies selected was primarily, we looked at all of the biggest wind and hydropower companies in the world, and then we narrowed it down by high-risk regions, and as well as the some companies that have received allegations against them because they're the ones that are most likely to have adopted some kind of commitment to community consultation. And we also looked for companies with best practices to be able to contrast them. So again, that was a very initial pilot project that we are looking to move ahead with. In terms of next steps, we are developing concept notes now. We are also looking for partners, so partners and funders. So if anyone is interested, feel free to get in touch and I can share more about that.
Wonderful. Thank you, Eniko. And there is another question from Catherine Pease around parallel US regulations that would apply to investing domestically in the United States that are similar to World Bank, UN guidelines, etc.
I don't have the knowledge to answer that. Eniko, would you have a strong sense?
Sorry, could you repeat the question?
Yeah, the question was around whether there are any parallel US regulations that would apply to investments in the US. And I imagine those might be referring to large-scale renewable energy investments in Native American communities or other projects of the sort, whether there are any regulations that would apply in the US that are similar to World Bank, UN guidelines, etc.
Yeah, again, I'm going to have to pass and look it up. But yeah, happy to do that.
Yeah, an interesting question to follow up on. And then we have one for both presenters from Alejandro Preuche, saying most of the FPIC guidelines and the examples show how to avoid the negative impacts on local communities. Do we know of any best practices to co-create with the local community a lasting positive impact? And I will take privilege of giving a preliminary answer on that. Would be the work that we mentioned briefly at the beginning of Grupo Yansa, that's YANSA, that started mainly on the Isthmus of Tehuantepec in the state of Oaxaca, both working with the local community on the response and in part opposition to a large-scale renewable energy wind project that was happening, and then organizing the local community for them to be able to create their own project and seeking outside investment where the ownership of the project would remain with the local community. And you can find more information on that at yansa.org, yansa.org. And I'd be happy to share with anybody in this group more of that as well. Eniko and Meredith, do you have other examples of best practices for co-creation with the local community?
Sure, I have one example, but besides that one, is a co-creation that Rio Tinto actually, but it's not on renewable energy, but again, lessons from the extractive sector. That Rio Tinto had in Canada in partnership with the Superior Watershed Partnership and Land Trust, and that was designing a community environmental monitoring program. And I'm also happy to share that. It's also on our website. It resulted in a toolkit for how to co-create environmental monitoring programs with local communities. So yeah, that's the example that I would raise.
Meredith, any examples from you or best practices that you've come across on co-creation?
I haven't been looking at co-creation from at this point, although I think it's a very important part of the question.
Yeah, and another organization that's been very active in that space is the International Accountability Project. And I think they might also have put out some best practices, or at least worked on that. I see we have another question from James Burdell. Let me take you off mute, James. And go ahead. Nope. Okay.
Classes.
Oh, there you are.
Can you hear me?
Yes.
In Meredith's first slide, she showed 4 investor categories, and I wondered if she could rank them as to the returns they've produced for the investors to date.
So I don't know if you want to just slide back to the asset classes, any one of those, Andrea. I think that's what you're referencing is these.
Yes.
So it's not these right here. So this wasn't specific.
No, it's not
to
those.
Any,
it's the prior slide.
Prior slide. Here you
That,
are.
yes.
So, right. So this slide wasn't speaking to the returns. There's no specific product associated with these as the asset class. The intention of this slide was to show the amount of influence we might have as investors within each asset class. To say within fixed income, which for folks on the line, so from a portfolio management perspective, fixed income tends to be considered a sort of a dampening mechanism against a volatile market. And it's a structured product where you are most likely to get
you're answering a different question. I'm asking, you referred to these asset classes several times, even in your earlier presentation, by, venture capital funds, and private funds, et cetera. So there must be some results available as to what the returns have been like.
No, so there's no studies in terms of, I think your question, are there studies that are specific to clean energy projects within each asset class?
Correct.
Okay. No, I don't have access to that.
Okay. Sorry.
Yeah, I haven't seen that either. I imagine the Cambridge Associates report from last year might have a breakdown by sector, but I don't recall them separating out the clean energy projects. Thanks, James, for the question. And we have another one from Delilah. Go ahead, Delilah. Hi.
Hi. Can you hear me okay?
Yes, perfect.
Okay, perfect. Thanks very much to everybody on this call. And my question has to do with Meredith's great point that, and it's actually on this slide, that the influence and the initiative to adopt best practices should really happen in the very beginning stages of the project development. And I've been working with project developers and lenders for about 7 years now, and have been focused on environmental, social, and governance issues. And one of the key challenges that I see for particularly independent project developers is that the projects are typically funded with roughly 25 to 30% equity up front, and then they go to the lenders for the debt capital. And typically, Ifc Performance Standards and Equator Principles and EHS guidelines are required by the lenders at a later stage after some of the project development has already started to occur. And so, when you're doing a project like a clean energy project, pretty much every country, I don't know if, I'm sure there are some countries where this might not be a requirement, but in every country where I've done work, and most of my work is focused on sub-Saharan Africa, but certainly I've done work in the United States and Asia and Central and South America as well, they require an environmental and potentially social impact assessment. And if you don't adopt Ifc Performance Standards and EHS guidelines in the impact assessment, which happens prior to the debt financing, then you can frequently end up starting to develop a project that's going in the wrong direction. And so once you get the debt financing, or once you're required to adopt best practices by the lenders, you've already got yourself in a situation where you might have upset the local communities, or you might have planned your project in an area that's between that's in critical habitat, or that's between protected areas, or that's in a protected area. And so it's very hard to go back and reverse this. And so I've spent a lot of time thinking about, how do you educate and incentivize the project developers to adopt best practices before the lenders come in and require it? It's capital, and I completely agree with you guys that what you're doing with this webinar is excellent, but I think that if we want to reach project developers and convince them early on, we need some sort of program like grant funding that's made available to incentivize these developers, or grant funding alongside the equity capital to incentivize these developers, or else the project return expectations of the equity investors just have to come down, because these developers are trying to maximize the return for the equity investors, and that's what's causing them to not adopt best practices in the very beginning. They're just like, we got to get this project done quickly, we got to keep it on time, we can't spend extra money on the E&S technical advisor. So I'm sorry for the long sort of the message here, but I really think that if there was a program to incentivize these investors, these developers, from the investors or from some sort of grant capital, then the investors could slowly start to learn and have a reason to learn about these risks that could manifest in their project if they don't adopt best practices in the very beginning. And I'm sorry, I don't want to take up too much time, but one other quick thing is that I would love to see more research put out there about the probability of negative risk manifesting in the project development, as well as the potential cost, to also incentivize investors and developers and make the argument that this is real risk management, this isn't fluffy stuff. Just wondering,
Wonderful.
what your thoughts are on that.
Thanks, Delilah. On the latter point, on the research, I think there is some good research, and that, going to your first point, needs to be supported somehow, right? And it probably does have to come out of grant capital. We can also do a good job, as Eniko has done, at looking at what those costs have been in other industries. In terms of project delays, project risk, lack of social license to operate, etc. And I think that there is already some pretty strong data on those. Eniko, feel free to supplement that.
Yeah, that's right. A few years ago, an organization called Shift produced a research paper on the costs, negative financial risks related to extractive companies not conducting proper community engagement and consultation. So there is some research on that, certainly not enough, and certainly not specifically related to renewable energy. So thank you so much for that point, and also for your other point as well, to target capital and developers. And I would love to, if you have specific ideas on how to do.
I think we might have lost Eniko for a second. If y'all can still hear me, I would say we have a contribution from John Evans saying that with respect to a conversation on incentivizing developers, we should bring up the RSF social finance integrated capital funds that I believe do a stacking all the way from grants to other forms of capital deployment. Meredith, did you want to add anything?
Sure. I think there might have been a funny lag. I may have added on top of you earlier, so I apologize if that happened. It was just to sort of reiterate the points that had been made, that from a project developer standpoint, it's when they're raising capital that we have the most influence. So to the extent that we're able to put in either side letters or to make, so that the expectation up front is that the fundraising costs will be lower if they address these issues, that's also something that will go into their calculations. So it may not be project specific, but if they're thinking, well, it'll be a lot easier to raise capital, we're able to do it more quickly with less resources if we address vulnerable peoples and community consent up front, then they'll be far more likely to incorporate those issues.
Great, wonderful. And if we want to switch a little bit on the engagement piece, there was, which I welcome very much, a question around what the process is, Meredith, for inputting into the development of the investor briefing. Should people get in touch with you? Do you have a process in place?
No, I would love it if folks would get in touch with me. Andrea, do you mind just going back up to the slide with my contact details?
Yes.
I would really very much look forward to that. the intention at this point is to gather up experts and sort of to have us all work in concert around developing this piece. So my role would be to act as a facilitator, and us all having a conversation around how to develop this piece. I know that folks on the line, in addition to their own great minds, probably also have extensive networks around these issues, and I would very much welcome their contacts and relationships so that we can really make this the most robust and pertinent document.
Great. And you will find information on Meredith, in case you can't see the slide, by going to Sonen, that's with one N, SONEN capital.com. And her email is mbenton@sonencapital.com. So going back to the opportunities for engagement, let's see what can come out. I think that starting with approaches such as the Google letter that Sonen Capital had put forth is a tremendous opportunity. I think that this investor briefing could be quite powerful, and I think within the Transform Finance Investor Network we could get to a consensus to sign it as a group, or contribute to it as a group, or individual investors might be willing to do so on their side. The other opportunity for engagement that I would bring up is, again, the idea of working more closely with the practitioners on the ground and with the activists that have been monitoring this negative impacts, as well as the positive opportunities for co-creation, as opposed to doing it just from our own desks and offices. And we would be able certainly to act as a clearinghouse and put you in touch with some of the practitioners that have been doing some of the best work in that area. Meredith, would you like to add anything to that? Do you think it would be a good start to do this? There's also the idea that Eniko brought up about submitting comments when there is an open comment period on best practices and standards. Oh, and I see that Betsy Dito raised their hand. So let's see what. Betsy, can you hear us? Oh, Betsy, I think you're on mute on your end.
I'm fine, Andrea. I didn't mean to. I don't have any questions. But I think this has been a fascinating session.
Wonderful. Well, I'm really glad that you could join us with this, and we'll definitely keep you engaged on what happens going forward. Let's see. Is there?
Andrea, to the question you would. Oh, sorry.
Go ahead.
I was just going to add to the question you had raised. I think raising awareness is extremely important. I know that many on this line are involved in many different ways with the climate movement and other environmental initiatives, and to the extent that we can start to integrate these concepts into the broader conversations that we're having around the clean energy transition, this is really the time for people to be thinking about these issues. If we, in a few years from now, it will be much harder.
Mm-hmm.
We're at the cusp. We're beginning to build out an industry, so this is really the time to have these conversations.
Great. Yeah, and there was a comment also in the question box by Niam Garvey again on the intersection between this work and the Divest Invest movement, and looking at where the potential linkages are for the Divest Invest movement to champion these social safeguards as well for investments that are shifting into renewables. And I see Jean has her hand up. Go ahead.
Hi there, can you hear me?
Yes, perfectly. Thank you.
Hi. I didn't really have a question. I just wanted to add into the conversation about incentivizing developers, and wondering if others know about RSF Social Finance's integrated capital funds. There's one in biodynamic soil. There's one in, let's see, Indigenous and fair trade. There's one in women's leadership, and there's a fourth one that I think is in agriculture. But it has that whole spectrum of grant funding, investment, and also technical assistance funding. I just thought people might want to know about it.
Great, wonderful. Thank you. Yeah, I think that would be one of the best cases to lift up. And from a perhaps more philosophical perspective, I would always remind people to be thoughtful around who should be bearing the cost of some of this work across the spectrum, all the way from the investors into these projects, but also involving the project developers themselves, who stand to benefit financially from these projects, and it would behoove them as well to be kicking in part of what it takes to develop this, to do it in an appropriate way.
Yes, and I want to just add that this is really one of the best webinars I have really ever heard, and I want to thank you so much for it. I so appreciate the integration of the presentations and the way it has built a certain kind of cohesion for me that I can present now to others. Thank you so much.
Wonderful. Well, thank you so much. I'm glad that you could join us and that it was helpful. Let's see. Are there any closing thoughts from Meredith and Eniko?
I just want to say thank you again, and just reiterate that if anyone is interested in hearing more about our outreach and the way that we are moving forward with it, please feel free to get in touch. We're also very interested in collaborating on the investor briefing and anything that comes out of that afterwards. So thank you for having us.
Wonderful. Thank you so much for this and for all the tremendous work that you've been doing.
I'll do my wrap-up comments, one being that the benchmarking and the research work that Eniko's team is doing is extremely important from a shareholder engagement, and we're talking public equities, and then also from a decisions around on the private side about where we deploy our capital. We really need to have the data available to us around what best practices are and where we can look for leadership and where we may need to push a little bit further where there are laggards. So I do want to emphasize how necessary that data is to us moving forward as an industry. And then the other, so the concluding statement would just be that I view this as sort of an all hands on deck issue, and all sort of knowledge that resources needed in order to move this forward. So I'm very glad to have this conversation.
Wonderful, thank you. And I entirely agree. There is a piece of it that is around the data, gathering the best practices out there and influencing them. There is this engagement piece also on the policy side, sensitizing people that touch these issues in general. There is the connection with the Divest Invest movement and the very proactive steps that asset owners can take, such as engaging with Meredith's asset owner statement. And as a concluding remark on my side, I would say, as is often the case, I tremendously applaud all the efforts that have been done across the renewable energy sector to develop it, and which doesn't mean we can sit on our laurels there, but the idea here is really to spur us all into action to do better, to go deeper in our impact, and to see really how all the different stakeholders can have an appropriate voice and an appropriate role, so that while we're solving one problem, we don't end up creating another one. I would encourage you all to stay in touch with Meredith, with me, with Eniko, if you're interested more generally in the work of the